Oh.
We'll be right back and get some water.
Tight, guys. Can everybody hear me and see the screen? If you can you like type a 1 in BootCamp chat? All right, sweet. Yeah, I think we've got the tech a little bit more down today, so sweet. Appreciate it. Okay, I'm just going to get started. So today in BootCamp class number 2, we were talking about full time frame continuity, conflict, and natural buying and selling. So we are just going to go ahead and get started. This section is titled Participation Groups. These are the contents: time frame continuity principle, participation groups, monthly, weekly, daily, 60, hourly, intraday. I'd like to make this a little smaller, but I don't. Hold on 1 second.
Control minus, control scroll out.
Whoa, control. There we go. All right, so what is time frame continuity? Time frame continuity principle. So time frame continuity principle is the second universal truth. And if you were here last night, we covered the first universal truth, which is the Strat scenarios, the 1s, 2s, and 3s. So time frame continuity tells us that price must trade in the direction of the most 2s and 2s going 3 across 4 or more time frames. And if you would think about it as kind of market correlation or having the market wind at your back. So when the market overall is going up, we want to be trading the things that are also going up. Participation groups, what do we mean? So when we are looking at a stock chart, we think of each time frame as a participation group. Because of the importance of the 4 participation groups, when analyzing any asset class, we always look at least 4 charts. And the most common ones that we are looking at for full time frame continuity is the month, the week, the day, and the 60. However, any 4 time frames in alignment can work for full time frame continuity. And the reason for this is because institutional buyers, they may only trade based off of the monthly time frame. Certain traders only trade off the weekly time frame. So that's important to know. Daily time frames, we have all these time frames, and when we get into the weeds of everything, you're going to understand why it's so important. But some people are just single time frame analysis traders, so we will get into all that stuff. But so the monthly group, which we look at all the time frames, we typically start at the year down. We look at the year, we look at the quarter, but the lowest, biggest time frame that you should go to is the monthly. So the monthly group is anyone who has created, added to, or reduced a position during the month. And one monthly candlestick represents every day traded within that month. So if the month opens on June 1st and closes on June 30th, that is going to be encompassed in that one candlestick. Some people may look at this monthly chart and believe it's a daily chart showing every day that month, but it is not. The monthly chart is drawn with only one bar to represent the whole month of price action. So like I just said, June 1st to June 30th, every single trading day within that is depicted in this picture of the monthly candlestick. And like we covered in the very beginning, the open, high, low, and close. So for a whole month, that is what information we get from that monthly candlestick. Weekly, just like the monthly, but not the weekly. So the weekly group includes anyone who has created, added to, or reduced a position during that week. There is one bar for each week of price action, which typically is 5 trading days. If it's a holiday week, one weekly candle is only going to be 4 days of price action, but it's still shown to us as a weekly candlestick. Daily. So the daily group includes anyone who has added to, created, or reduced a position during the trading day. There is one candlestick for each day of price action. So from the open, which we covered in the Japanese candlestick section, from the open to the close, everything that was traded during that one day. The 60-minute, same thing, includes anyone who has created, added to, or reduced a position during the 60-minute that opens at the bottom of the hour and closes at the bottom of the hour. Hold on. That opens. Yes. So, okay. With the Strat, our candlesticks, we want them to open and close our 60-minute candles at the bottom of the hour. Because otherwise your candlesticks are off and you're only getting the first 30 minutes in a 60-minute candle, and that's just not a proper hourly candlestick. There is one bar for each hour of price action, and there are 6.5 hourly candles to make up one full day of trading. And then we have intraday continuity. So we have full time frame continuity with the higher time frames, the month, the week, the day, the 60. So we talked about how 4 time frames need to be in alignment. Well, if you're an intraday trader or a scalper, you still need 4 time frames in alignment, but they don't have to be the month, the week, the day, the 60. They can be the 60, the 30, the 15, and the 5. And during periods of extreme volatility, sometimes we will even use the second charts and the 1, 2, 3 minute charts to gauge our time frame continuity. Most of us don't use the second charts, but in extreme volatility with like the limit down days we had a couple of years ago, that you did need those. So okay, so opening price. And this is really important, how time frame continuity is determined. And it's determined by the opening price. And it's also important on your charting software, especially with the daily candlesticks, that you have the setting turned on to where your candle changes color based on the current open. So the current daily open to where price is currently trading, and not based on the open from the previous day. So because that's going to change the color of your candlesticks exponentially. And I can post how to do that in the BootCamp, but you need to have it for the current day's open and not relative to the previous day's close, because we want to know what color the candle is today. And that all is based on the opening price. And we're going to talk about bullish full time frame continuity, bearish conflict, and intraday full time frame continuity. So the first thing to note is that time frame continuity is relative to your open. So if you're above the open, trading above, like say the daily open, then the daily candle is green. Therefore, you have a green day. So green continuity. And we consider full time frame continuity to the upside when the 4 major time frames that we use, the month, the week, the day, and the 60, are all trading above their respective opens. So you can see here, monthly, this is the open, and we're above it, so we're green. This is the daily open, we're above it, so we're green. This is the weekly open, we're above it, so we're green. And then the 60s, we're above it, so we're green. So that's how we determine full time frame continuity. And the exact opposite, full time frame continuity to the downside, is when the last price traded is below its open. So if we're below, and remember from the first lesson, red candles open at the top. So if we're trading below the open, we have red time frame continuity on the month. If we're below the open on the day, and remember the day open is up here, if we're trading below it, we're red. Week, open, trading below it, we're red. 60-minute, trading below the open, we're red. So we have full time frame continuity to the downside there. And this is a universal truth because this tells us that the level of aggression of the buyers and sellers is extremely high. You cannot refute the fact that every time frame is selling, the month, the week, the day, the 60. And these are the people that are in control. So the strongest participation group. Again, therefore, this is a universal truth of price action because you cannot say that they aren't selling when every time frame is red. Conflict. Anytime one or two of the major time frames are a different color to the other time frames is to be considered in conflict. So we talked about conflicted twos up and twos down in the last session, but this is a full time frame continuity conflict. So you'll see here the month is green, the week is green, but the day and the 60 are red. So when you don't have all 4 major time frames in agreement, we also consider that conflict. And then this, okay, so intraday time frame continuity. There are 2 types of time frame continuity. We have intraday, and then we have our standard month, week, day 60. And you can see the intraday can be the 5, the 15, the 30, the 60, but still going along with the 4 time frames in alignment time frame continuity principle. So if you're a scalper, you might only need the 60 down. If you're more of a longer term trader, you're going to want the month down. So during periods of high volatility, more volume is being traded on the intraday timeframes. Thus, intraday continuity becomes more important. And this is due to the fact that you could see as much volume in 60 minutes that you would normally see in a day. So the 60-minute would become your daily chart. This allows you to make a week's worth of trades in a single day. And to add to that, Rob would always say every 60-minute candle is like a new day to us because we get new continuity and things can completely change from 1 hour to the next. So the flip, which we will cover later, but it's very important. Alex, I think
That's my cue.
that's your cue. So you just want me to hit stop streaming then? All right, I'm hitting it.
I'll just pull it up. All right, let me just make sure we're all good to go. Yes, we are. So if anyone's kicked out, you can rejoin via the link I just posted. But let's get down to it. So the 4 C's of continuity. And these are the 4 questions we're asking ourselves when we're trading the strat. It's because these questions need to be answered if you're going to make any trades. So let's get into it. You're going to see the 4 C's are control, confirm, conflict, and change. And these are your 4 C's. The first one is control. Whenever we're looking at a chart, we want to ask which participation group or groups are in control of current price direction. And then confirm. We want to ask ourselves, are all participation groups confirming each other? So do we have the month, the week, the day, and the 60? Or do we only have the day and 60 in our favor for making a trade? Very important to know which ones are confirming each other, or are they all confirming each other for full time frame continuity? The next one is conflict. Are any of your groups in conflict? So if the month and week are going down and you're looking to buy, you need the day and 60. You would be buying into conflict, which you'd want to know, but you will not know that if you do not have to ask yourself this question and look for that. And then control. We want to know who is in control and for how long, because we know price is an aggregation where it opens at a specific time and a specific price, and then it closes at a specific time and price. That tells us how long that group can be in control for. So since the monthly group is the largest, it represents the institutional group, because the institutional group is going to be making trades on a longer time frame basis. So if they're going in and they're like, I need to buy 100 million shares this month, that'll show up on the monthly chart and you'll see a bright green candle. On a weekly, your weekly group tells you who's in control this week. And then your daily group tells you who's in control today. Oh, sorry guys. Sarah, you're going to have to end your live stream in the Discord. Yeah, we're fixing it. We'll restart. We'll restart. I got you guys. Sorry about that. All right. I'll give everyone a minute to just get back in the screen share. We'll restart. I already saw a question. We can get to the questions right once we get to the end, and we will clear that all up. So you'll have to rejoin the Discord stream. Apologies. All right. Hopefully everyone's in. So the 4 C's, for those in Discord that missed it. You're going to have control, confirm, conflict, and change. The first one's control. You want to know who is in control, which participation groups are in control of the current price direction. So if all time frames, the month, the week, the day, and the 60 are in agreement, up or down, that would be a strong period of control, and they're all confirming each other. So all the time frames would be in control and going to the upside or the downside with full time frame continuity. Then confirm. You're going to want to ask, are they confirming each other? So if you have full time frame continuity, all the 4 groups are confirming each other. If you don't, maybe you have the day and the 60 group confirming each other, which is still a period of control where they're confirming each other. They're going up today and right now, but you'd only have today and right now to be making that trade. So you want to know which groups are involved in confirming the direction of each other group. And then you want to ask, are they in conflict? So if the month and week are red and the day and 60 are green, they're in conflict because they're conflicting colors. So if they're in conflict, you want to know that before you make your trade, because then you have to know you're trying to change what other groups are doing. And you can look at the continuity levels to see that. We'll get into that shortly. And then as far as control is concerned, we want to know for how long. So if the monthly group is in control, it's going to be in control for a month potentially. The same with the weekly group. It's going to be in control this week. And then the daily group is who's in control today. And the other thing we'd like to add is with the monthly group, it represents our institutional group or bigger investors, because if they're going in this month and they're like, well, we really, really want to buy NVAX, which is, it's been going this month and last month. It's like, if we really want NVAX this month, the monthly chart's going to show that. It's going to be bright green. So it represents our institutional group, and that group lasts the longest. And we could say the same about the quarterly and yearly time frames representing an institutional or bigger group. So override. When the 60 and daily groups confirm each other, they're going to override the monthly group for immediate control. And this makes the new flip super important because it's either going to give participants of the daily chart control or change control back to the 60-minute, weekly, and monthly groups. And we'll have a visualization to show you guys this so you can visualize it. But think of it this way. If the month and week are all green and the 60 and daily are red, at that point, it's going down today and right now. The 60 is right now, the day is today. Now, when the new 60 opens, which we call the flip, if that 60 goes green, the month and week are still green. So at that point, that daily seller, we have no evidence of that seller anymore because 3 of the 4 time frames are all confirming each other, and thus the control is to the 60, the weekly, and the monthly group. The daily group is not in control. And on the next slide, you're going to see an example of this, where the day and 60 went red while the week and the month were green, which gives immediate control to the sellers. And it actually looks like we're missing an image in here. And it's actually a really important image. So that is on me. I apologize, guys. Let me fix this. I went through this a few times and I did not catch that one. So that is completely on me. I apologize. So for simplicity, we're just going to go like this. So you can see, looks like it's not going to let me full screen up in here. All right, that's good enough. So you can see the 60-minute went red at the open with the daily group. And at that point, we were trading above the weekly open and well above the monthly open. So at that point, we have no evidence of that weekly buyer or that monthly buyer. But we do have evidence of right now, for example, in this 62 to the downside. They're selling on the 60-minute basis. And then today, they're selling on a daily basis. So the day and 60 guys get immediate control and price action moves lower, even though the month is still green. So changing control. And each 60, you can see, will do that. They tried to sell it down in the morning. The 60 attempted back higher with the week and month green. And then once that new 60 opened and went 2 to the downside, whoever was trying to buy that, the day and 60 group told them to get lost and they had to stop out of their positions. And we'll have that fixed once we get the PDFs to you guys. I apologize. So confirming. When we talk about the groups are constantly in a series of confirming each other or negating each other. So the weekly group is either going to confirm or negate the monthly group. And the weekly group is confirmed or negated by the daily group and the 60 groups. So each new open that occurs is either going to confirm what we already know or negate what we already know. So for example, let's say the first week of the month trades 2 to the upside. So it closes higher than it opened. The second week is either going to confirm that by going green and 2 up again, or it's going to attempt to negate that and go 2 to the downside, which would change what we know. So each week, like we said, confirms or negates the month, and that same thing happens the weekly group each day, and the daily group and weekly group are confirmed each 60. So it's in a constant series of confirming or negating what we already know about time frame continuity. So in this example, you're going to see we can use, there's this study called TFC bars. We can show you guys where to find that if you have Thinkorswim. There's also a study for TradingView. But it allows you to identify the color of the 4 major time frames on one chart. So this allows us to just easily see how continuity relates to future price action. So if we zoom in here, you'll see here, the day, the week, and the month, they provide a strong period of control where all of these time frames are confirming each other. So at that point, we have no evidence of a buyer. And then anytime the 60 is red, it is continuing to confirm that and give control to the aggressive sellers. So whenever this 60 goes green, this is what we'd call conflict, where you can see it's too conflicted. Just the 60 group is attempting to buy. So it's not a very strong buyer. And we can also identify that as corrective activity, because at that point, every other time frame is still a sell, while this one's attempting to go up. So we know this buyer here is wrong. And they trade lower. And then you can see they go green again. They go 2 up on the 60-minute basis. And then they have a 2 to the downside right here on the 60. So this was, once we get to reversals, you'll see what that is, but it's a 2 to the upside, then followed by a 2 down. That's a reversal back down. Every participant that we know of was a seller at that point right here. And this was a trade we actually took on, this was a Monday. I believe it was, I want to say it was 2 months, or it was last month, I believe. And then you can see they resolve lower. Now, during this period of control to the downside, you'll see you do have very slight green on the daily with the 60. So at that point, we can't identify whoever that weekly and monthly seller was because the day and 60 have immediate control. But each 60 is either going to confirm this very weak period of control or negate it. So you can see they go green, trying to go back to the upside. And then you get another 2 down on the 60 right here, giving the control back to the sellers. Every time frame was back to red here. And then they continued lower. And that's going to continue happening. Slightly green, and then back into the period of control lower. And then once the new week had opened, you'll see this. Notice how the weekly group is now negating what that first week had done. So this is when we're talking about each week confirming or negating the monthly group. That is exactly what we're talking about. So notice the monthly group, they're selling, they're selling, they're selling. The new week opens, goes green. That's negating what we know to be true. So when the 60, the day, and the week all go green right here, we have no evidence of that monthly seller who was previously selling. And that occurs here. And you can see then they start coming back the other way. So unlike traditional technical analysis using lagging moving averages or any other type of lagging indicator like a MACD or there's a million of them, this is pretty much instant because if you're going to get a big move against you, the weekly group is going to have to be going in your favor, or at the very least, the daily group. And you can see that very much shown here. So now let's talk about the uncoupling. So we're going to talk the uncoupling, the week and month uncoupling, the day and 60 importance. And these two are completely messed up. So that is on me once again. I apologize, guys. So the uncoupling is the first time during any month where the opening price of the 4 major time frames occur at different times, and thus they normally occur at different prices. So on any Monday, the day and week open at the same price at the same time. So we actually don't know what the daily group is doing. Because at that point, since the opens are the same, we only understand what the weekly group's trying to do. And then on any new day, the day and 60 openings are the same. Because at the open of a day, the day and 60 open at the same time. So we only know the first 60 of the day what the daily group's doing. And what this means is the earliest time that we can have an uncoupling where all 4 major time frames occur at different times with their opens is on the second hour of trading on a Tuesday. And this means we gain more evidence over time. This does not mean we cannot trade on a Monday. So the week and month. If the month begins on a Monday, the week and month opens will be the same until the second week of the month. So in this scenario, the uncoupling doesn't occur until the following week on the second hour of trading on Tuesday. And if the month opens any other day besides Monday, the uncoupling occurs on the second hour of the following day, which I'm going to show you guys something. If it sounds a little confusing, which a lot of people do get confused at this point, we do have a little image coming up that will hopefully clear that up for you. So as it pertains to the day and 60, which are 2 of the 4 major time frames, they reset every day, and the 60 resets every 60 minutes. So for those of you that want to be swing traders, this is what will make swing trading just a little bit more difficult because each day is in a constant series of confirming or negating the week and the month. And this doesn't mean we can't swing trade. It just means we have to be extremely aware of the day and 60 opens if we're not trading on like a very long time frame. Like if you're an investor and you're holding for multiple months, then instead of using the day and 60, you might be using the week, the month, the quarter, and the year. So it's not completely relevant to you, but extremely important. 2 of those 4 major time frames reset every day. And now the decoupling. So this image should give you guys at least a good way of visualizing what that looks like. What you see here is the big oval. This is the month. This is when the month opens. The smaller ones in here, this is the week. And you're going to have normally 5 days in a trading week. And you can see the big thick circle, that's your day. So at the beginning of the month, you'll see how these lines all intersect. You have the week, the month, and the day. Opens all are the same, because if we open month on a Monday, all of those opens will be the exact same. So we have the least amount of data when it comes to identifying the participation groups. Those are all the same exact price, the same level, opening at the same time. And then come Tuesday, you'll see how that daily open separates from the week and the month opens. And then you have a separate day, and then you also have separate 60 opens, second hour of trading each day during that week. And then notice we get the new weekly circle, or new weekly candle. When that week opens, you'll see it's now a separate open from the month. So this is the weekly uncoupling from the monthly open on the second week of the month. And the uncoupling then occurs here on that second Tuesday. We're going to see we have a separate week, we have a separate month, then we have the separate day, and then within the day you have that separate 60 open, the second 60 of the day. And what I want you to see is that each week, you're going to notice the day and the week opens start at the same time, no matter what day of the week opens on. So each week you have this series of uncoupling between the week, the day, and the 60-minute time frames. And that covers most of what we're going to talk about with continuity. We will be able to go through some charts and show some examples today. At least that was my plan. So we can go through them and help you guys with identifying control and conflict and seeing the time frame continuity. There's some really good examples from the trading day today that we can actually talk about. So if you have any questions about continuity, this is where you can ask those. I'm going to be taking some notes so we can add them to the slides. And then after the end of the stream, I'll make sure to make those changes and get the slides to everyone. And tonight's class is going to be a little shorter, but we'll have more than enough time to go through charts and answer more questions. So now's your time. Yeah, once we get to the charts, you'll see it a little bit better. But as far as just understanding the 4Cs, what is the study for TradingView? It is by TFO. I'll get a link to you guys once we get to the end of this. Just for reference, yes, this is just to show you that all the opens start at the same time here, and then the week open separates, and then the second day of the week, the day open separates from the week. And we'll have an example of that on the charts. And we can pull those up. So as long as people are good to go, then we can get going here. Yeah, we can talk about that once we get to the charts. Make it simple. All right. All right, so we're good to go. So what we're going to look at is the 60, the day, the week, and the month. And then let's get into it. So what we can see is the month opened on Monday this week. Brand new month. 5/29/02 was the open of that. So if we apply that to all of the time frames, you'll see. Notice the week open and the month open are the same price, and they're the same level because they open at the same time. So we actually don't know what the weekly group's doing. If we then look at the day, you'll see on Monday, at the beginning of the new month, the day open is also the same. So all three of these time frames started as the exact same level, giving us less information. Then the second day of the week opens here. Notice how the daily open now separates, and it's a separate level compared to the week and the month opens. It's a completely separate level now. So when we're looking at this, we now can identify the daily group. Sorry, I was reading the chat. But we can now identify the daily group. And that same thing, if we go down to the 60, you'll notice the first 60 of the day on the new month, the 60, the day, the week, the month opens, all the same right here. And then the second 60, notice how that separates and decouples from all of those opens. So every single day, you'll get that first 60 where the opens are the same. And then notice the second 60 on the second day of the week right here separates the opens from the daily. And then today, you'll also notice they open the daily here at 530.77. You'll see that's the exact same level as this. And then the second 60 of the day decouples. And now we can identify the 60 group since the opens are separate. And then that changes what the day was doing. It goes from being red to now green. And that is why the separation of the opens is super important, because it's either going to confirm what was already occurring or it's going to negate it. So at the beginning of the day, it started red in the morning, this morning. When that second 60 opened and went green, what's that trying to do? Well, it's trying to change the day back to green. And then we would be able to identify what? Well, we'd be able to identify the 60 was green. The day went green above this, 530.77. At that point, we're also above the weekly open at 529.02. And then we're also above the monthly open at 529.02. So when this goes red to green, we're into full time frame continuity where every participant takes the offer. And hopefully you guys can see that. And I really hope this is a good example because it should show that to you very, very well. Now, as far as this pertains to Turnaround Tuesday, as Sarah wanted to talk about, Turnaround Tuesday is a phenomenon where price will simultaneously reverse what it was doing on Monday and then change what the week is doing. So when we're looking at the first day of the week, and this week's not the best example, we'll actually go to GPS here. So what we can identify in GPS is this. This is Monday. You'll see the very first day of the week, very first day of the month. Notice on the daily time frame, they go 2 to the upside. So they're trying to go higher. And then it closes as a 2 up in red, so it's conflicted. The buyers were met with a stronger seller because that is now a failing to, or at least attempting to. So when it comes to Tuesday, you'll notice on Tuesday, the seller comes in here and then sells. What did that also do? Well, the week is now red and now it's coming back in. So why we call this a simultaneous negation reversal or negation plus reversal is because we're going to be simultaneously changing the weekly continuity and reversing whatever happened on Monday. So they tried to buy on Monday and now on Tuesday, they're forced to sell and exit. And this will happen across all time frames. So the first week of the month, and we can go to SPY here. We can look at the first week of the new year, 2024. So if we go down in here, notice this. The week and the month opens are the exact same. Here, 472.16 on both. Notice the second week of the month goes green down here. What is it attempting to do? Well, it just uncoupled from that monthly open, and now they're uncoupled. So now we can identify the weekly group. When this goes green, the weekly group's now buying. So where are they trying to go? To negate what they had previously done to start the new year by separating those opens and then changing what we know to be true. So within that, you'd have the daily, the 60 and weekly group buying. They change that monthly continuity around, and now you have full time frame continuity up. So the 2 down, 2 up reversal is what we'd identify that as. But the most important part is just notice they went down first and then separated the opens and then changed what they were doing. And this happens across every time frame because each move that occurs will either be confirmed in the same direction or negated every single time. So whenever we're taking trades, for example, SPY today, we will cover this once we get to the actionable signals, but it's a really easy one to understand. You'll see it, there's a hammer here. So it looks like a hammer, like this is the bottom of the handle. So this is something we look for because anyone that was selling before, they're getting countered. It's a failed 2 trying to go 3. It just ran out of time to become the 3. So if it's trying to go these 2 bars, a compound 3 to this, as we had talked about yesterday, when it breaks this, that's where you'd want to be participating and getting in. Because if that works, you're going to negate the day, give you full time frame continuity. And then as far as confirming and negating goes, you'll see that works, right? Now the day is green and you have full time frame continuity. Then the new 30 opens. that will either confirm this move that we just entered, or it will negate this move. So if it's going to confirm, it'll go 2 up again. It'll open green and it'll do it, which they did. And you can see that move is then confirmed. It's continuing. So each move will always do that. You can see in this case, they had the 2 down 30. You'll notice, did they confirm or negate that move? They negated it because they went 2 to the upside. So anyone that tried to short here, they have to get out. If it was going to puke, it would go 2 down and then 2 down again, confirming that reversal. They never did. So that constant series occurs across all time frames, and any entry we take will either be confirmed or negated. So we can even go and take a look on the monthly. You can see when this month goes 2 up, they're trading higher, and then you make a 2 to the downside. So now it's lower high and lower low. It's trending down. This will either be confirmed or negated. They open red, full time frame continuity down, then they go 2 down again, confirming that. And then you can see you get follow through. And then you get the negation of that move, 2-2 back up, now turning higher. So each move either confirms or negates. And that thing that happens with the decoupling, we call it turnaround Tuesday, but it happens on all time frames. And Sarah, she did mention the color of your daily time frame in relation to the open. So if you're on TradingView, you can see color bars based on previous close. You want to make sure that's off, because if it's not, then, for example, you can see here, this candle on SPY is, we'll say this candle here on SPY is red, the Monday, first day of the week. If we change that setting, it should turn green. So you'll see, notice how it turns green. That's really deceiving, because at that point, you would think that the buyers were taking the offer that day and it closed higher, but it didn't. It closed 2 up, but red. So you need to make sure that setting's turned off. The other setting that is really important when identifying the 60 group is we need to have, and we can only do this, you have to open a 60 chart on TradingView to do this, or a 30. You want to make sure that your session is set to regular trading hours, because if you don't do that, you'll notice the 60 group will actually be completely different. So we had this morning the hammer on the 60. That's the signal we look for, and then up they went. If we change that and turn extended hours on, you'll see, similarly, it looks like a hammer, yes, but it looks completely different. It opens here and then it closes up here instead of opening slightly higher and then closing red. And the reason that's an important distinction is because normally news events will be coming out on the 60 flip. They also come out on the 30 flips, so that's still relevant. But when it comes to 60 flip, things like the energy numbers, which we trade every Wednesday, come out at that time. So if we're going to properly gauge the changes in continuity and what those guys are doing when events and news comes out, we want to have it open at the bottom of the hour. This one's opening, as you can see, at the top of the hour, 9 o'clock, 10 o'clock, 11 o'clock, etc. Whereas if we turn that off, you'll see now it's opening at the bottom, 8:30, 9:30, 10:30, etc. How does it affect futures? So just because futures trade 24 hours means if you're going to be looking at like an ES chart, for example, you're going to have the top of the hour charts. It doesn't mean you can't use these. We call these the sideways 60s because we can still identify a 60-minute group. It's just a different 60 group than the one we're currently or normally identifying. So you can either, one, turn on regular trading hours and it'll look just like the SPY chart, so you can trade off your charts and it looks the exact same. Or two, you can train your eyes to see the other 60 groups. So for example, at 8:30 here, that's when the New York session opens. So we can identify on a 30 chart, this is the first 60 group, this is the second 60 group, and so on. And then this is the third, the fourth, the fifth. So it's going to be, as you can see, if we go to the 60, it's going to be a completely separate 60 group, but it's still a 60 group. So you can use both. It'll double the amount of signals you'll get intraday, but we prefer the bottom of the hour. And that's because, as you can see, the New York session opened in the middle of this candle before this candle had opened at 9 o'clock. So if you're not using the proper 60 chart, you don't get the New York session open as one of your 60s. It happens in the middle of a 60. And that's just one, I wouldn't call it a news event, but that is one event that occurs at the bottom of the hour, not the top of the hour. Now, as far as what I'd like to show you was just a few things we did today, just to get you guys accustomed with just looking for continuity. We're not going to talk about the signals or the entries or anything. We're just going to talk about what we know to be true with continuity. So for example, NVAX, this is a 500%er from the morning session. What we can first see is that we have a 2 up on the week above this previous weekly high. That's a 2 to the upside, so that's good. We also have a 2 up on the month. So the month and weekly 2s to the upside, and price should be trading in that direction. And then we'll see on the day. Monday, they open and they buy. Tuesday, they opened, they did go 2 up. So the buyers were in control because you're making the higher high and the higher low to the previous range. That's good. It was slightly red though. So what would we consider that? We'd either consider that corrective activity, where the day is red, where the week and month are green still, or we could consider that conflict, where the daily guys are conflicted with the week and the month. So what that tells us is, since it closed red, we'd identify it as corrective or conflict, because if you're a trader in there that day, they had the slight bearish bias because it closed red. So someone was hitting the bid or someone was selling positions that day. And if they were, their stops are going to be at an obvious pivot. The only thing we have, if we look left, the only thing they could be short against would be that high a day. So once that's closed, what we're thinking is, if the next day opens and reconfirms the month, the week, and the day, or the month and the week direction with the daily continuity, whoever sold that previous day has to get out. So when we're trading above that, those guys are in trouble and they're going to have to buy to close to cover those positions and get out, which causes more buying into a stock where we already know every participant's a buyer. So you'll see, we can then identify the intraday continuity. The 60 group, they went 2s to the upside and they bought. And then the second 60 group decoupled and they confirmed that, 2 up again. The third group opens, goes red. Now that changes what we know to be true. When that occurs, we would reduce position if we were long into this, because that changes what we know. We're an intraday guy. Then it comes down, 2 to the downside. And then notice your mother bar. So like we talked about with the inside bars and seeing the ones, this is your mother bar right here. All this action is stuck in that. So once we get to the broadening formation section, we'll notice the try. There's the 3. That's a broadening formation. Also a triangle or a try. That starts in there, which we will get to as we get further into the course. But seeing that mother bar, how it's doing nothing, this is where we do not want to be trading. So we traded the morning session, and then we waited for all the ones to set up, and they broke it, didn't go anywhere. There's nothing we could do. So corrective activity versus its reversing. When it comes to differentiating between the two, we want to know how many signals we have in force, which we have not gotten to. But when you have really long green bars, what we like to say is green gets greener or red gets redder. Because if NVAX, if they come in last month and they're like, okay, we really like NVAX, right? If that's going to go from $4 to now it's trading at 20, it's going to be trading above the monthly open. And then each week during that month, we'll be trading above its weekly open. And if that's the case, the month and the week, they provide a period of control. So as long as that's the case, anything to the downside during that week and month being green, we would consider it corrective against that. That doesn't mean that we're going to go in here and, like, let's say we're trying to buy in this action and then we're going to hold into this stuff. We don't do that. Once we get to creating positions and that type of position management and stuff, we'll talk more about entries. But what's important to know is that when you have bright green continuity confirming across 2 or more time frames, those lower time frames would be considered corrective. And that doesn't mean, like with NVAX, doesn't mean we can't short it, because we can identify the groups. So if we know it's just the 60 group selling in here, we can go in here and we could say, I want to play this 2 down to the downside and I want to short when my signal goes in force, which we haven't gotten to yet. Don't expect you guys to know that. But when this goes red, the 60, the 30, 15, 5, all that's red here. And if we go in, show you guys the intraday groups, you can see that. So this is going to be your intraday continuity. with those TFC bars, and we'll blow it up a little bit. I forget how to make the chart. Is it that? Nope, it's not. Does anyone remember how to make the singular chart really big? I completely forgot. I normally don't do it. Alt. You guys are the best. Nope. Not Alt. Alt Enter. Nope. Double click. Nope. Well, we can just go like this, just to make it simple. Why not? But you can see, yeah. So you can see on NVAX, it's Alt click. Oh, okay. Thank you. But you can see on NVAX this morning. So they open up here at 8:30. Full intraday continuity this whole time. And then you'll see these 3 time frames are confirming each other. So when just the 5-minute here is red, similarly to if just the 60 is red and the day, the week, the month are green, that's corrective, pretty much for sure. Because at that point, it's too conflicted. All these other time frames are bright green to start the day. So how are you going to change these around is our question. And for 5 minutes, yeah, you do have a seller that's taking some profit, but it doesn't reverse anything. That's still a 2 to the upside. Now, when it comes to, as you can see in here, the fiber goes red, right? Still corrective as far as we know. And then right here, notice how it changes what we know, or at least it's trying to. The 5, the 15, the 30, 60. At that point, second 60 of the day here, what we'd say is on an intraday basis, we can't really pick up on that buyer right at this point here. But what we do know is since the day, the week, the month are all bright green at that point, this seller is probably not changing that because it opened so far down here. So the key with continuity is to stick to things that have long red and green bars because it makes it extremely easy to say like, well, you can see they traded up 25% this morning. The only way you reverse that is if the 60 and intraday groups are all confirming each other. So in here, you can see they do get some downward action where all the time frames are confirming each other. But that only lasts so long, lasts for 60 minutes. And then right here at 11:30, if we zoom in, you can see right here, notice that continuity changes. So for 60 minutes, they're trying to counter the day, but they're nowhere near doing that. And when we get to confirming and not confirming and negating, but understanding stops and how that stuff works with scanning, it'll make a lot more sense as far as understanding that. But the simple way to think about it is if the day opens down here, all the daily guys are buying today. So when this comes back in, who's to say the daily guys won't come and buy the dip? Which you can see they did. They just sit on the bid in here, trying to get more. Trying to figure out how to get 4 charts. For TradingView, you may need, or you're going to need a subscription to it. So I believe, I'm not sure which subscription does it. I have the top tier, I think. Let me see. You can see on TradingView here. You can get 4 charts per tab for, it's $25 a month. Now, if you're using something like Thinkorswim, or you have an account with Thinkorswim and you're an American citizen, there is no charge for Thinkorswim. So if you can open a brokerage account, you're of age and all that good stuff, then Thinkorswim will allow you to do all this stuff, and you won't have to mess with TradingView. The only reason I use it is because it's really pretty in comparison to Thinkorswim, where if we open, these are the charts we're looking at during the day. Oh, looks like, yeah, here it is. You can see Thinkorswim, it works, it's just not as pretty. TOS TFC indicators. So if you go to scripts-scans or scripts here, I linked it in the bootcamp. If you go scripts and scans, you can go and actually get any of the indicators that I'm using during the streams or what we're talking about now. The continuity bar script is, if you scroll down, it's one of the older posts. But what you need to do is you go into studies with Thinkorswim, create an indicator, and then copy paste it and name it whatever you'd like. The one thing that we did not have in the slides was natural buying and selling. So we're going to talk about that now, and that's going to be the last topic we cover. It's pretty simple. So what we need to understand before we talk about that is for example, the SPY. Everyone's trading the ES or the SPY. What is it? It's the average of 500 stocks, and they're going to be weighted differently. Some weighted more than others, but it's the average of 500 stocks. So the way we identify a natural buyer or a natural seller is doing the opposite of whatever SPY is doing. So you can see SPY closed really strong. They're going up today. So where would a natural seller be in something that's going full time from continuity up like the SPY? Well, it's going to be anything in the SPY that's full time from continuity down. Because at this point, the month, the week, the day, and then all the intraday groups, they're buying. So we have no evidence of a seller in SPY today or this week or this month. So where's the seller going to be? If we go and take a scan, which we'll talk about how to do these, but I'm going to just scan and we can go like this. We can scan for bearish continuity and we can scan in the SPY and say, well, what were they selling today? And I have to make sure we got the day in there as well. So you can see today there was Dollar Tree, Cisco, KHC, Target. So a few consumer staples they were selling today. Now we can go and take a look at that. So these are within the SPY index. But if you go to Dollar Tree, you see this thing got wrecked. It's like, why does this happen? So this was actually something we talked about pre-market with Dollar Tree. And we also mentioned the inside fiver action will signal at high day, which we'll get to shortly. I know everyone wants the signals, but we mentioned this at high day for the potential short back through, and that was a huge, huge trade for those that were able to get that. But you can see it's red on the day, red on the month, red on the week, failed too, coming back in. And then any time all the intraday timeframes are red, that occurs right here. At that point, the whole market in the SPY was two up at that point for the most part. And then this was where the sellers were at. Whereas if you look at the SPY at that point in time, it was a red 60. But you're going to see it was a two up on the day in here. It was a two up day, green on the month, and it was green on the week. And it was slightly red on the 60. So less sellers in the SPY, but Dollar Tree is where we can definitely identify there was some natural selling going on in there. And this was on the gap list with news. So that's why we had it up on the charts today. We'll get to all that type of stuff later in the course. But that is one example. We can also go to CF. So you can see in the morning, every time frame was red this morning. The day was a 2 to the downside. The month was red below 79.36. So you can see when this day goes 2 down, it changes the month or the weekly and the monthly open right here at 79.36 because before they were green. So now the monthly group, the weekly group, daily group, and the 60 group, they're all sellers and they have to get out. And that's what we see. They're all the guys getting out of their positions. And then you'll notice gauging the magnitude or where is it going. 2 up red on the week. It's 79.36 right here. It's going to go 3, or at least it's going to try to. And it did it to the penny right there. If we go to Cisco, you'll see this. So on the day, 2 up, that fails and goes 3. You'll notice full intraday continuity in the morning. The week, notice it was green. So this is an example of where the week and the month were green, and the day and 60 guys actually countered it. So I wouldn't identify this as natural selling until that weekly and monthly it changed continuity. But for sake of example, we can see in the morning, the 60 and daily group, they went red. And we can see those here. Right below this, 4752. So the day and 60 group get immediate control of price action. And what do? They negate the month and they negate the week. And then you get the failed 2 on the week, go 3 to take those guys out. So as far as when we would pick up on that, the weekly open at 46.72, that's when it would show up on our bearish full time from continuity list. I'm not sure if it had news or something today. If it did, then it would have been on the gap list, but I don't believe it was. So at 46.72. So right about here. full time frame continuity down there with all the intraday guys selling, and then you get the 3 on the week. So, do you guys feel comfortable with continuity, with identifying the 4 groups, the intraday or the 60 group, the daily group, the weekly group, and the monthly group? TFO for TV? Yes, I can. So tonight's homework, before I post it, it's going to be, I want an example of full time from continuity up and down. It can be any chart, any asset class, doesn't matter. If you want to, you can use intraday continuity, but I prefer you guys use the 60, the day, the week, and the month. And then I want you to show me where a point where the day and 60 group change continuity. You could technically use examples from here, but I want you guys to show me where it's conflicted and then where it changes continuity. And as far as scanning stocks without Thinkorswim, you can actually use our Strat site, app.stratalerts.com. So on the Strat site, you're able to scan for the patterns, which we have not gotten to yet, but you can scan for inside bars, you can scan for inside bar 3 ones, scan for outside bars, which actually might be broken. I'm not sure if that's fixed. It is not. But you can scan on here. As far as scanning for directional, so like who went down today or who has continuity, you can also scan that. So if we scan and we say we want bearish continuity, we can scan that, and this will give us all the bearish continuity names. There's 96 of them today to the downside. And then once we teach you guys the signals and stuff, this is also where you're going to be scanning your signals. Because intraday, we can scan and we can say, well, I'm looking for an inside bar, an equilibrium. I can filter that with bearish continuity. Here's all the inside bars with bearish continuity. So this is where all the sellers potentially come in and start selling tomorrow. Where if we open one of these charts, you can see there's your inside bar. And on APA here, you'll notice the week is red, the month is red, bright red. And then on the daily basis, there's a 1. So once we get to that, we will talk about how to scan and what we're looking for on the scans, which is going to be a whole section and a whole day worth of talking, maybe even 2 if we need to. But as far as the TFO bars indicator, you can see it is called, you're going to have to give me a second. There's a chance TFO actually might, I'm not sure if you got rid of it or if something happened to it. Yeah, so this is not the indicator we're looking for. If anyone has it off the top of their head, for those of you that are in the Strat Discord, post it in the chat because we have to search for it. So time frame continuity oscillator is TFOs. And this one does have a lot of extra settings. So if you want it to look similar to what I've got, you want to use one time frame. So like, for example, we can use, we'll say the weekly chart. And then you can remove any of that stuff, turn it to binary. And now you'll see it will plot the weekly continuity for you. So on APA, for example, weekly continuity went green here, changed to red up in here. Yeah, I will. There's two L's. And I'm going to add that into the scripts and scans so we have it all together. Just give me a sec up in here. And do we have, as the last roll call, do you guys have any questions at all? No matter how big or how small. Yeah, so any 4 time frames in alignment. So if let's say we're an institutional, or let's say we manage a fund, we can do the SPY yearly plus, so you can do the SPY, we'll have the week, the month, the 3-month or the quarter, and then the year. So if we're going to trade as like an institutional guy, weekly charts like our 60 chart. So each week is either going to confirm or negate what the month, the quarter, and the year are doing. So as you can see, previous weeks, we had the 2-2 week up in here, changes control. So the weekly guys and monthly guys decided to sell. And that was that was actually with the quarterly guys, because the quarterly guys came in red here as well. Well, 523.8. So you can see here, changes control. Week, month, quarter was all red down into here. And then when this goes inside a week back up above that, now controls back to the buyers. So that also occurred with the new month open. So as the monthly flip or the monthly change. So the month opens, the week, the month, and the year, now they buy. Whoever was short on the quarter, they're gone. Or whoever was selling on the quarter, they're gone. So it's the same thing across all time frames. And if we go to like the crisis or the crash of COVID, you can see how this would have worked for you. So if we go into the month, you can see the month, the quarter, and the week, 3 time frames confirming each other. So at that point, when we look at 2020, you see the yearly open was this. So the year opens here. They trade up, 2 down week, changing control to the monthly and the quarterly guys and the weekly guys. So whoever is buying on that year, no evidence of that, and the year change continuity here. So every time frame down. This is where you'd get your hedges on for sure. And then they go inside down, they're continuing, 2 down, continuing. And then the week, they're going green here. The week is changing. What also is changing? Right here on the month at 247.98. And then on the quarter as well, 247.98. So notice they sell the first quarter. The second quarter goes green, changing control back to the quarter, the month, and the weekly guys up. And that occurs at the bottom of your big broadening formation, which we'll get to. Yes, so it doesn't have to just be the SPY. We're going to talk a lot more about that type of, like, we call it a universe. So some people will only trade the 30 stocks in the Dow Jones, and you can do that there too. Or they'll only trade tech stocks, which is 100 stocks in the NASDAQ. Or they only trade one sector, like the semiconductors. But as far as identifying natural buying and selling goes, it's looking for something that's doing the complete opposite of an ETF that's holding it. Ideally a sector ETF or an index. Ideally both. So like for example, if you go to SMH, First of all, SMH, where do you get in? The week, which gets the month and the quarter and the year all go in again here. But if you go today, you can see the semis, they're definitely trading up. So if there's any semis in there too to the downside, that's where the shorts are getting in, or that's where people are getting out of longs. That's where they're selling. I don't know if we actually have any examples of that today, but like that's definitively going up, bright green. Anything that's not doing that, that's red, continuity down, is a sell for sure. And the reason that is because if all of these are going up, we know the market's it's going up for sure. So the only way that other stock would be continuity down within that sector or that ETF is if there's institutional selling going on. That's the only way it can happen. There's no retail guys going in there selling 100 million shares and dropping it 10% on an update like this. It's got to be institutional guys. So that's why we call it natural buying and selling, because there is no other explanation for why that occurs. So I don't know if we have an example. I'm going to try my best to see if we can find one. I'm going to scan everything I got. Yeah, it doesn't look like we had any semiconductors two down today. So every semi was a two to the upside and trading higher as far as we're concerned. Yeah. You're saying there was an opportunity when the 60 is red. Yeah. So when we talk about everyone's going to trade the strat differently, if we're looking at something like NVAX, when this 60 goes red, if you're an intraday guy, the 5, the 15, 30, 60s, that continuity changed. You had full intraday continuity down. So if you're a scalper, you can scalp it up. When we go to like the 5 minute and get all those time frames up here. In the morning, there was a 5 minute we actually did talk about on the stream. You'll see intraday continuity. So like you can be a scalper in here. The fiver, they go up. Then there's an inside bar, which is something we look for. We'll get to that later parts of this course. And then this is where we get in, right there. And then you can see they go inside bar again, and then they're going up again. And then once this continuity changes here, you'd get out of that long position. And if you got a short in here, it would have stopped you out. That's fine. We have tight stops. And again, we will get to that. Not quite yet. But within this area of continuity down intraday, there's people who will go and short that. You can take the 2 up fiver, reversal, 2 to the downside. And there's another one, 2 up fiver, then 2 to the downside. And you can see, as far as the intraday guys, 5% in 15 minutes. Like, that's pretty good. Most people try and do that in 3 months, right? So you can definitely do stuff like that. It's not something we're going to get to quite yet, because that's once you get good at the strat and you can do the simpler things good. But if we go to something like SPY, the reason we don't normally suggest that, at least not in all cases, trying to play against intraday stuff, is because you can see like intraday continuity changes here. But at that point, this was the start of the month. So the week, the month, the day, 60s, the only thing green was the 60. So you're fighting everything else. When volatility is super high, like NVAX, you're going to get like a 4% move, right? Because it's moving 20% in a day. Whereas this goes up 0.2%, which is like nothing. So when you have higher volatility and that volume is pouring into those lower time frames, makes more sense to play intraday, since each 60 could be a really big range. Now, the times we normally do that is from exhaustion and all that stuff, which we have not gotten to yet. So we'll get to that in the future. But it's about increasing probabilities. Yes, absolutely. Because you got to think, when we're looking at these and we're identifying the groups, what we're identifying is like, are those algorithms, 70% of the market traded by algorithms, are those algorithms buying right now, or are they selling? And when we have a full time frame continuity, a strong period of control, it tells us that they're buying or selling very aggressively if it's up or down. So what we don't want to do is go in there and try and counter those guys. That's the opposite of what we'd like to do. Does that click? I hope so. How do you manage to filter down and trade NVAX out of all stocks? Well, first of all, I had a position in it for Monday, so I was already definitely looking at it all day. But on last night's nightly vid, which I actually forgot to, I was looking at it. I forgot to post in mod charts and tag everyone, so I sincerely apologize for that. But in last night's nightly vid, what we identified was what we already talked about. Just the fact that you have these long green bars. If we go to 60, the week, or the day, I mean, and the week, and the month. As stratters, what we're looking for is the long green bars. Most people are too scared to buy it up here. Given what we know to be true, when this goes green on the month, the week, the day, and the 60 right here, that's still going up as far as we know. So there's no reason that we can't buy that. So I had already had a position for Monday because it went 2 down, 2 up. And again, we have not gotten to that yet, so don't worry about it. But when we see that on Tuesday go 2 up but red, it tells us that sellers were in there on Tuesday, but we also know they're wrong because the week is still bright green. If we mark this out on the daily chart, you'll see the week at that point, notice how green your continuity is. It's up 20%. So these daily guys, they tried to counter that with the day and 60 groups, but they're not strong enough to do it because the month, week, very, very green at this point. So the next day when it opens, it's either going to confirm 2 to the upside, which is the same. You can see 2 up, 2 up, 2 up, confirming the week and the month, or negate 2 to the downside. So when it goes 2 up, that tells us everything that's happening on the month and week that we've picked up on is still occurring, right? When that becomes a 2 above that, 1841. And it was on the list because SPY today, this was taking last week's highs, and it was also taking yesterday's highs. So it tells us we want to trade things going up. And NVAX was the definition of that's going up. You have the week with a signal, which we haven't gotten to. The day went 2 up, month is bright green. And on the bigger time frames, you have this big, big broadening formation, which again, we haven't gotten to it, so don't worry about that. But we had many reasons to believe that was happening. The other place that we had for signals today was ARM. You can see another inside bar. And at that point, you see you also have a signal in the month, which again, we haven't gotten to, but the inside bar, they go 1, and then they trigger anyone that was short in the previous months. They have to start getting out. And that inside day here tells you that's happening. And you have full time from continuity. And then you'll see this is why we'd prefer not taking the short on the 60, but taking this back into the continuity after that 60 group is done selling. Yes. So what daily can provide a weekly move? No. The weekly tells you what's happening this week. So if the week is green, this week they're buying. So we want to be part of that. The daily tells you what's happening today. So if the day is confirming the week, that's a period of control. They're buying today and this week. Now, as far as negating, if you get a day to the downside while the week was going up, and the day has the ability to negate or change what that weekly continuity is, then we can trade that, yes. But we prefer to trade with all the 4 time frames in alignment. So, yeah, well, Stan, we will get to that. I don't want to get you guys in here trying to I don't want anyone making trades until we make or until we get to the part of the series with stops, and then we have a section. It's the next section we're going through tomorrow night. It's called What We Look For, and it's all the setups we look for with the strat. So tomorrow night we'll start looking for setups, and then we'll have you guys searching those out on the charts and just posting some examples, and then we can also go and see like what had happened after those setups. I'll get the homework posted right now. And I will link the, just one sec here. All right. I will post an example. I apologize. I'm going to have to delete your post so I can get my example in there. So Dollar Tree, just an example of the day in 60 group go red, negating the week and month open, changing the continuity, changing who's in control. The TFO indicator, you're going to have to use 4 of the TFO indicators. So, for example, if I add 3 to my chart, we can select one time frame. So we'll select the 60 and then turn it to binary. So it only shows green or red. And then we can also do the same for the day. Also change it to binary. So you can see the day and 60, they're red together here. Yeah, I'm sorry. I've been very bad at reading the question before I answer it. I will make a note of it and I'll pin it or I'll put it on my computer screen. Okay, so as far as a poll or something to test comprehension, that is something I can throw together. I can't promise that tonight. I don't think I'm gonna have enough time to do that. But we can do that in maybe I'll probably have time tomorrow. Let me think. Thursday? Yeah, I should have time tomorrow. So I can throw something together to make sure that you guys, yeah. Well, we can also backtrack it and be pretty simple to throw together. Interesting. Like the test to get in the group. Yeah, what I was thinking, I'll check out that site and see what it does, but I could throw together like a Google form or something and have yes, like multiple choice questions based on some images identifying certain things and whatnot. Would not be too difficult to do. And that was something we did think about of doing previously, so it's a good reminder. All right, good. So if you guys are all questioned out, you guys have good understanding. What I want to see is your boot camp homework. Ideally, something that looks similar to what I've posted as the two examples here. And you shouldn't just look for two examples. What you should do is you should find your two, post them, and then continue looking at the charts and trying to see what you know to be true at any point in time and how that relation of the continuity works. Because once you can see the continuity, you've got one of the truths nailed down, and there's only one more to go. Technically, we're still going to expand on the first one, but it's a super big part of the strat. Understanding that continuity will confirm and negate, understanding that it will change, and then seeing how the different groups change control. All right. So we're going to end it off here. If you guys have any questions or anything, post it with your homework or post your homework and we'll make sure to correct you guys if anything's incorrect. But I'm glad you guys are enjoying, and I will see you guys tomorrow night for the next boot camp. We will be talking about tomorrow night the 1s, 2s, and 3s, but we're going to talk about actionable signals and what we look for. So that's going to be when we get to seeing trade setups. So hopefully you guys enjoyed, and I'll see you guys then.